Hey, welcome back. It's Jason Walter here. After taking a week off, it feels so good to be back. I definitely miss you guys. And I could have made about 10 videos today because a lot has happened with the housing market just within the last 5 days. So in today's housing market update, I'm going to be sharing the biggest news of the week and starting with home prices and home sales. Towards the end of this video, I'll share the latest news regarding mortgage interest rates because those have been approaching record lows once again. And I'll also discuss the latest news regarding mortgage loan forbearance numbers. Also, a recent drop of mortgage application numbers, which could be a sign of weakening buyer demand. Lots to cover in today's video, and this video took me hours to make, so if you appreciate real estate market updates all wrapped up into one video, then please hit the like button. I greatly appreciate that. And if you want a real estate agent referral for virtually anywhere in the US, then go to homeandmoney.com/Jason. All right, let's go ahead and dive into today's video, starting with the latest news regarding home prices and home sales. According to the National Association of Realtors, after 4 straight months of declines, sales of previously owned homes rose 1.4% in June, month to month. In addition, all 4 major US regions experienced double-digit year-over-year gains. So home sales rose 1.4% from May and 22.9% from 1 year ago. One of the main reasons why home sales increased in June was the fact that more people are listing their houses for sale. Because of this, housing inventory increased slightly in June, marking 4 consecutive months of increases. However, inventory is still down approximately 19% compared to 1 year ago. Meanwhile, the median home price in June reached another record high of $363,300, which is up 23.4% from June 2020. As you guys know, I'm a housing market data nerd, and I keep track of these stats every single month. And I noticed that in doing this, that this is the 4th straight month that home price records were broken. So check this out. In February 2021, home prices reached an all-time record high of $313,000, and that tied the record from October 2020. Then the following month, in March 2021, home prices reached $329,000. In April, $341,000, and then $350,000 in May, and now in June, we've reached $363,000. So in other words, the median price of homes in the US increased $50,000 over the last 4 months. Part of the reason why home price records were broken so many times ever since this pandemic begun is due to the increase of luxury home sales. So check this out. Here's the percent change in home sales from a year ago by price range as of June of this year. So homes that sold in the range of $750,000 to $1 million increased 119%, and homes over $1 million surged by 147%. And by the way, home prices have increased greatly over the past few years. So the median sold price in the US was only approximately $250,000 at the beginning of 2019. So home prices have skyrocketed about $110,000 within the last 2.5 years. Lawrence Yun, who's NAR's chief economist, stated the following: home prices are in no danger of a decline due to tight inventory conditions, but I do expect prices to appreciate at a slower pace by the end of the year. To give you my honest opinion, if home prices decline or they slow down for the remainder of the year, this is what we would experience during a normal real estate market. For those of you who follow the channel, you know that I support my claims with data. So let me show you 2 graphics. This first one is from Redfin, and it shows sales prices of houses in about 400 of the largest US metros over the past 3 years. So the gray line at the bottom there represents home prices in 2019, which would be a more normal housing market. Home prices went up from around March to July and then more or less tapered off for the second half of the year. 2020 obviously was a very abnormal year where home prices went up from May to the end of the year. In 2021, home prices shot up around the same time as 2019, and more recently, prices appear to be softening. We also can see this seasonal summer slowdown in Sacramento as well. So this is from Ryan Lundquist of SacramentoAppraisalBlog.com. The black line is the median price in the Sacramento region. So as you can see there, we are just starting to see some softening in the last couple of weeks. If that trend continues, that could mimic a normal seasonal cycle like we had in 2019 and 2018 when prices started to trend downward in the summer months. All right, so going back to this report from the National Association of Realtors, houses in the US are still selling very quickly. So the average days on the market was only 17 days in June. That was unchanged from May and down from 24 days last year. In addition, 89% of homes sold in June were on the market for less than 1 month. In addition, first-time home buyers still represent approximately a third of all home sales. They represented 31% of all homes sold in June, which was even from May, but down slightly from a year ago. Something I wanted to mention was the fact that a lot of people are saying that first-time home buyers are getting decimated and they're not buying houses. In addition, they're getting priced out and they can't compete with corporations like Blackstone. But when we look at the actual data itself, this is simply what we're not seeing in general in the US. Out of every 10 home sales in the US, 3 of those are coming from first-time home buyers, and that's unchanged from May. Now, don't get me wrong here because I'm not saying that it's easy for any home buyers. It certainly remains a strong seller's market in general across the US. For example, the unsold housing inventory sits at a 2.6 month supply according to the National Association of Realtors. What this basically means is that the current pace of home sales, all houses listed for sale right now, would be sold in 2.6 months if no new housing inventory were to hit the market. A month's supply of less than 4 months is considered a strong seller's market. In order to have a more balanced real estate market, we need approximately 4 to 6 months. If we have more than 6 months, again, it becomes a buyer's market. In other news, investors and cash buyers still continue to gobble up homes in the US. So the National Association of Realtors reported that individual investors or second home buyers purchased 14% of homes in June, up from 9% in June 2020. And by my dumb math here, that's a 50% increase. In addition, all cash sales represented 23% of all transactions in June, even with May, but up from 16% in June 2020. That's also a 50% year-over-year increase. As a real estate agent in the greater Sacramento area, I'm personally seeing a lot more cash transactions in our neck of the woods here. I actually have a cash buyer of around $1 million, and we had to write 4 offers in order to get an offer accepted, even though our offers were all cash. The seller on one of the houses that we offered on received 7 offers for a $1 million property, and 3 of those offers were all cash. Now keep in mind the Sacramento area, our median high home price here is only $600,000, so a $1 million property is a luxury property in my neck of the woods. The increase of cash transactions overall in the US and in Sacramento, of course, is from people selling their houses in more expensive areas and also cashing out their stocks with record gains. So what's on everyone's mind is, will home prices increase forever? I mention this because the Mortgage Bankers Association, or the MBA, reported a couple of days ago that mortgage applications for home purchases decreased 6% from a week ago. Joel Kahn, who's one of the MBA's vice presidents, stated the following: on a seasonally adjusted basis, compared to the July 4th holiday week, mortgage applications were lower across the board, with purchase applications back near their lowest levels since May 2020. In fact, when we look at mortgage applications for home purchases, they generally have been on a downward trend ever since the end of March of this year, despite a dip of mortgage rates during that same time period. In my opinion, the dip of mortgage application numbers for home purchases is really the reflection of the fact that we have a lack of houses for sale, plus record high home prices, which is keeping some home buyers at bay. I'll be sure to keep you updated regarding this because if application numbers continue to decline, this could signify that home buyer demand is definitely weakening. All right, changing gears slightly, let me give you a quick mortgage interest rate update, and then I'll share the latest news regarding mortgage loan forbearances. The Mortgage News Daily reported today that the average 30-year fixed-rate mortgage decreased to 2.87% today. Rates are not too far off from their all-time record lows of 2.75% that was set in January of this year. Let me now give you the latest news regarding mortgage loan forbearances. According to the MBA, the share of loans in forbearance decreased to 3.5% for the week ending July 11th. That's down 26 basis points from the prior week. There remains approximately 1.7 million homeowners in forbearance, which is about 3 million less than the peak set in May of 2020. And we're still not seeing a significant increase of inventory from people exiting mortgage loan forbearances. This is because out of all the people who have ended their forbearances so far, only 7.4% have either refied or sold their houses. And that figure has been holding steady for around 7.5% for the entire year. Data analytics firm Black Knight reported today that the number of loans in forbearance dropped by 198,000 from a month ago, and 230,000 plans are either scheduled for removal or an extension this month. Check out the link below if you want a real estate agent referral for virtually anywhere in the US. Also, if you got any value out of this video whatsoever, then please hit the like button and also consider subscribing if you haven't done so already. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and I look forward to seeing you on the next video.